G'day there. In this video, I am going to share with you a very simple strategy that has enabled many of my clients to pay off their mortgages inside 15 years, saving themselves literally hundreds of thousands of dollars interest in the process. G'day there, my name is Phil McGilvray. I'm a financial coach, financial well-being consultant, and founder of the Money Boss movement, where we make practical, life-changing financial education both understandable and accessible for everyday people so that you and your family can thrive financially. And today we are looking at mortgages, and more specifically, how can we pay our mortgage off 15 years earlier and subsequently save ourselves literally hundreds of thousands of dollars in interest. So what I'm going to do, you can see on the screen here, this is my Grandma's Jars mortgage calculator. If you would like to get access to this mortgage calculator, there is a link in the description below. There's also a training video that goes with it just to show you how to use it. So the average Australian home loan right now is $601,000. Most loans go for 30 years, so I've put 360 months in here. And the average Australian home loan rate at the moment is around 6.1%. So it's February 2025. So if you're paying more than this on your interest right now on your mortgage, please speak to your bank. I regularly see people that are paying 6.8, 6.9, and last week I had someone that was paying 8%. This is way too much. You need to be speaking to your bank, especially if it's an owner-occupier P&I loan. So this is the fundamentals that we're putting in here. Down here you can see a bit of a summary. Again, $601,000 is the loan. Your monthly home loan repayments are going to be $3,642. Loan term 30 years or 360 months. The scary thing down here though is, can you see that over the course of that 30 years, you are going to pay $710,000 in interest to the bank. This is interest. So if we add that to the 601 you're actually paying back, you will end up paying somewhere around the $1.31 million back to the bank. And remember, this 710, well, in fact, all of it is money that you pay back to the bank after tax. After tax. So what I want to show you now is a very simple strategy that I encourage all of my clients to do as a minimum. Now, as I've shared with you, many of my clients over the last few years have paid their mortgages off inside 10 years. Many have paid their mortgage off inside 15 years simply by doing what I'm about to show you. So down below here, we have the amortization schedule. So this is basically month 1 through to month 360. What's your repayment's going to be? Well, we know what that's going to be, $3,642. But the thing that is scary here is you can see on month 1 of that $3,642, $3,055 is interest, and just $586 is principal being paid back on the loan. So you can see here, your loan has gone from in month 1 from $601,000 down to $600,413. And if we take it all the way through to month 60, which is 5 years, you can see that 601 has been reduced to $559,000. So it's only reduced by $40,000 over that first 5 years. Now, I regularly have people who, when they get into mortgage, I hear them saying, oh, well, in a few years, we'll be able to refinance, or we'll be able to do some renovations, or, they assume that there's going to be a whole lot more equity built up in their loan. And the reality is it doesn't happen for quite a long time, because up front, most of your repayment is going in interest repayments. So the strategy is simply this: make a commitment, find the money where you can to pay double the principal component of your loan repayment each month. So if we look at month 1 here, the loan repayment is $3,642. I would encourage you, if you can, to find an extra $586 to pay off your mortgage. And then next month, an extra $589. And then next month, $592. And whatever your principal payment is each month, make it double. Double that principal component. So when you go into your home loan statement, you will see the payment that you make, okay, which would be equivalent of this $3,642. You'll see that going in against your loan, and then you'll see the interest component, which is this bit here, going out of your loan. The difference between that is the principal. Whatever that figure is each month, make an effort to, as a discipline, say, I'm just going to double that. And if you do that, now over time, of course, the principal amount's going to grow as you go along. That's okay, because we get paid more as we go along. If we just commit to that simple strategy, I'm going to just double my principal payment. That's all I'm going to do. I'm just going to double my principal payment. Then you will save yourself literally hundreds of thousands of dollars in interest. So if I have a look here, let's just say, and this is a very simplistic way to do it, but if I change the home loan from 360 months down to 180, which is half, so down to 15 years, you will see down here that the principal repayments have just gone from $710,000 to $317,000. So you're basically saving yourself the best part of $400,000 in interest and 15 years on your home loan repayments. And as interest rates come down, try to make it more. But the earlier on in your mortgage you can pay more, the faster this is going to happen. But all you need to do right now is just commit to doubling whatever your principal payment is. Hopefully that makes sense. If this has been helpful, please click the like button. Please click the subscribe button, because every single week, I was going to say month, every single week I release new videos with practical, life-changing financial education, because I truly believe that it's the little habits, the little strategies that anyone can implement that can literally make $1 million difference to your family's future. So click the like, click the subscribe, and I look forward to seeing you in the next video.